good morning. Welcome back to our weekly Jen Hornick, Bob Palestri real estate market update for Long Beach Island. Today is guest speaker day, so we want to get right to our guest speaker about mortgages.
Good morning. Before I exit stage, I am going to give you 3 reminders on how we're buying houses on LBI today. Number 1, you've got to see it ASAP. We've talked about this for weeks. You've got to get down and see it right away. It's not going to last. Number 2, make your best offer first. Make it first, otherwise it's not going to happen for you.
There's no guarantee that you're going to get another chance for best and finals. I'm seeing best and final not happening. Just go for it right from the start.
And number 3, another item we've talked about, bring that pre-approval letter with you. And with that, I'm going to exit and bring on Frank Astemborski, our guest speaker today.
Hi, Frank. Thank you so much for coming today.
You're very welcome.
Just to let you guys know, Frank Astemborski is with Draper and Kramer Mortgage. He has been a mortgage professional for 28 years. He works extensively on Long Beach Island and the surrounding markets. And I just want to let him go ahead and give us some insights.
Thank you, Jen. Appreciate the invitation, Bob, as well. Hi, everybody. So as Jen said, we got to keep an eye on things, especially on Long Beach Island. A pre-approval is quite important and vital in this market right now. As he alluded to, it's high demand, low supply. So when you're going to make that offer, you got to go in and it's very strong. Most times that listing agent is going to want a pre-approval letter.
Oh, absolutely, yeah.
And that pre-approval letter is something that they're going to forward to the seller, and the seller needs to see that. So I tend to customize pre-approval letters. So when I speak to somebody, we go through the process, which I'll explain in a moment here. But importantly, that pre-approval letter is going to be customized to that offer. So if you're making an offer of $795,000, $1.5 million, whatever it is, I'm going to submit that. Jen or Bob are going to submit that to the listing agent, and the seller will be able to see that, wow, this is a qualified person. They're ready to rock and roll. If you don't have that, it's a more difficult situation, because that seller may say, you know what, I'm going to take an offer from somebody else that has a pre-approval letter. Obviously, cash talks too, but we're talking about mortgages right now. So a pre-approval letter is part of the process for me is to speak to somebody in detail. It could be a 5 or 10 minute process, could be a half-hour process. All depends on their circumstances. It could be a W-2 person, somebody who's been on a job for 30 years. It could be somebody who just formed their new business last year. So there's various circumstances that I need to go through in detail before I feel comfortable offering a pre-approval letter. A pre-approval is a little more detailed than a pre-qualification. To me, a pre-qualification is quick phone call, sounds pretty good, and you're pre-qualified, but get pre-approved. I want more details, I want more information. Perhaps I may have to run through an underwriting system. But the important part about this is when I put my name on something, I'm going to stick with it, and it's going to see through the whole process. It's not going to get denied or rejected.
And that's the important thing, especially on the Long Beach Island market. Bob and I have told you guys before, the mortgage company, the mortgage professional whose name is on your pre-approval will go a long way, because these names are trusted, and we know that their name is on this person is good to go.
Yes, thank you. All right, so we're going to move over to interest rates. I know Bob and Jen have some concerns. I think interest rates are on everybody's mind, so I want to get into that a little bit right now. Yes, if you're aware of what's going on in the world right now, inflation is a little bit higher. We're seeing in gas prices, food prices, milk prices, everything. That also lends into interest rates. Typically, inflation and long-term interest rates do not get along. Never have. They're sparring partners. They just don't get along, and they work together. So as inflation increases, so do interest rates. How is the government trying to curb inflation? One key factor right now in my line of work is the Federal Reserve Bank is actually meeting this afternoon. They are potentially hiking short-term interest rates to try to curb inflation. They meet several times a year. Chances are they may hike rates 0.25% today. They may wait till next month. We don't know what they're going to do, but we know for a fact they're going to be hiking short-term interest rates. There's a potential of 3, 4, 5 this year. Bank of America is saying there could be 7 this year. I think it's a little on the high side, but again, they're trying to fight inflation. Once inflation drops, and they believe that will happen probably in July, that's the speculation right now, interest rates will stabilize, and there's a chance that interest rates may ease up by the fall, winter, maybe going into next spring. I don't know. I don't like to forecast that far out, but they're trying to settle things down a little bit. So that's going to be a good situation for home buyers. Where we are here. So in doing so, banks right now are lended by the Federal Reserve at 0.25%. Again, coming back to short-term rates, they're going to be increasing that. So there's going to be a little pinch to home equity lines of credit, perhaps auto loans, or even credit cards. So this is something that affects on the short term, but on the long term, it doesn't affect it as bad. So that's important to understand. For my line of work, I look at a 10-year Treasury bond. Now, I don't expect everybody out here to be watching this, but the 10-year bond is very important. 2 years ago, so when the pandemic hit and lockdown hit in March of 2020, the 10-year bond actually decreased to 0.54%, which is no return on the money. A year ago, February of 2021, it was at 1.25%. So we're going from 0.54 to 1.25. Today, as of yesterday, it was 2.04%. So we went from 0.54, 1.25 to 2.04. When 10-year bond goes up, interest rates rise. So the days of low to mid twos on a fixed rate from a 15 or 30-year fix are not available anymore. We're now hovering on a 30-year fix in the upper threes. We're a little more aggressive on LBI, especially on jumbo pricing, surprisingly. Rates in the, loan amounts in the 1 to 1.5 million loan range size can be actually a little bit lower in rate than a $500,000 loan.
Right, okay.
We try to be more aggressive in lending on higher interest rates. On higher loan amounts. So I want to be clear is, these are strictly predictions of where the market indications are now. I do believe what I'm saying is going to happen. It may take a little more time, perhaps a little bit less time. Overall, I never think rates, even going into 4s, are very high. Again, as Jen said, I've been in business 28 years. People are going to buy houses. Demand is very high. It's just out there. So people are going to move forward. You can't worry about what happened yesterday. It's past us. Keep moving forward. I'm busy. I'm doing plenty of pre-approvals. We've become way too comfortable with low rates. Gotta keep moving on. So I encourage you to be a buyer. Don't let interest rates inhibit your dreams of home ownership, especially on LBI. Way too many dreams out there, fond memories. Do it now, and there we are.
Thank you so much. That was very, very helpful.
You're very welcome.
We get a lot of questions about just what you talked about, so I really appreciate it. Thank you guys for watching. Any questions that you have for Frank, feel free, reach out to Bob and I, and we'll get your questions right over to Frank, and we'll even connect you with him if you have particular questions. So hope